The realm of cryptocurrency regulation has recently experienced a considerable transformation, particularly highlighted by the recent dismissal of a civil enforcement action taken by the United States Securities and Exchange Commission against Coinbase and its parent company, Coinbase Global. This legal confrontation, which commenced back in 2023, not only marks the end of a significant chapter for the SEC, but it also indicates a potential shift in the agency's strategy regarding the regulation of the cryptocurrency industry. In the year 2023, the SEC took the significant step of initiating a lawsuit against Coinbase, alleging that the platform was operating as an unregistered securities exchange, broker, and clearing agency. The SEC claimed that Coinbase had been facilitating the trading of crypto asset securities without the necessary registration since 2019. This lawsuit was part of a broader trend where the SEC sought to enforce its regulations within an industry that is often characterized by ambiguity, rapid innovation, and a lack of clear regulatory guidelines. The allegations made by the SEC were serious and had far-reaching implications. The agency asserted that Coinbase operations were in violation of several securities laws. According to the SEC, the platform allowed users to trade digital assets that it classified as securities, which necessitated registration and compliance with the regulations set forth by the SEC. The SEC's interpretation of what constitutes a security under United States law was a central issue in this case, and it has faced considerable pushback from many stakeholders within the cryptocurrency industry. Coinbase, for its part, maintained a firm stance that crypto assets do not meet the legal definition of securities. This viewpoint is widely shared across the industry, with many arguing that applying traditional securities laws to digital assets is not only inappropriate but also detrimental to innovation and technological advancement. On February 21, 2025, the SEC announced the dismissal of its lawsuit against Coinbase through a joint stipulation. Acting Chairman Mark T. Uyeda emphasized the urgent need for the SEC to reassess and rectify its approach to cryptocurrency regulation. He stated, "It's time for the Commission to rectify its approach and develop crypto policy in a more transparent manner." The Crypto Task Force is designed to do just that. This statement underscores the SEC's recognition of the importance of adapting to the rapidly changing landscape of digital assets. The dismissal of the lawsuit carries significant implications for both the SEC and the burgeoning cryptocurrency industry. Firstly, it indicates a shift towards a more collaborative and less adversarial approach to regulation. The SEC has acknowledged that its previous strategy, which was largely characterized by enforcement actions, may not be the most effective way to engage with the rapidly evolving crypto market. Critics, however, have raised concerns that this dismissal could set a troubling precedent that favors the interests of the crypto industry over stringent regulatory enforcement. Organizations such as Better Markets have labeled this decision a historic mistake, warning that it may undermine the SEC's authority and its ability to protect investors in the long run. In conjunction with the dismissal of the lawsuit, the SEC has launched the Crypto Task Force, which aims to create a clearer and more defined regulatory framework for digital assets. Established on January 21, 2025, this task force represents a strategic pivot in the SEC's approach to cryptocurrency regulation. The primary goal of the Crypto Task Force is to develop comprehensive policies that address the unique challenges posed by digital assets. This includes enhancing transparency, promoting public engagement, and providing regulatory clarity. The task force aims to foster greater transparency in the regulatory process, allowing stakeholders to better understand the SEC's approach to crypto regulation. For many years, the SEC's views on cryptocurrency have primarily been conveyed through enforcement actions, often without meaningful engagement with the general public. The task force seeks to change this dynamic by actively involving industry participants, consumers, and other stakeholders in the regulatory dialogue. By establishing clear guidelines, the SEC hopes to reduce the uncertainty that has historically plagued the crypto sector, enabling businesses to operate within a well-defined legal framework. Despite the dismissal of the Coinbase lawsuit, the SEC's commitment to investigating potential misconduct within the cryptocurrency space remains steadfast and unwavering. The agency's Cyber and Emerging Technologies Unit will continue to monitor blockchain technology and crypto assets for any signs of fraud or violations of securities laws. This dual approach, promoting clarity while maintaining oversight, reflects a nuanced understanding of the complexities inherent in the ever-changing crypto market. The SEC's dismissal of the Coinbase lawsuit and the establishment of the Crypto Task Force are part of broader changes occurring within the agency, particularly following the return of President Donald Trump to office. Under his administration, the SEC is revisiting its enforcement strategies, especially in cases where crypto firms have allegedly violated regulations without engaging in fraudulent activities. This shift in focus may indicate a more lenient regulatory environment for cryptocurrency firms, which could foster innovation and attract investment in the sector. The anticipated appointment of Paul Atkins, a known crypto-friendly figure, as the head of the SEC further underscores the significant shift in regulatory strategy. Atkins has been vocal about the need for a regulatory framework that supports innovation while ensuring investor protection. His leadership could signal a more favorable environment for cryptocurrency firms, as the SEC seeks to balance regulation with the need for growth in the digital asset space. The political landscape significantly influences regulatory approaches, and the SEC's new stance suggests a willingness to reassess its regulatory framework under Republican leadership. This shift may lead to a more favorable regulatory environment for cryptocurrency firms, fostering innovation and attracting investment in the sector. However, while the dismissal of the Coinbase lawsuit and the formation of the Crypto Task Force represent positive steps toward a more transparent and collaborative regulatory environment, challenges remain. The SEC must navigate the complexities of digital assets while ensuring that it effectively protects investors from fraud and misconduct. As the cryptocurrency market continues to evolve and expand, the SEC faces the challenge of developing comprehensive regulations that address the unique characteristics of digital assets. This includes determining how existing securities laws apply to cryptocurrencies and establishing clear guidelines for market participants. To achieve its objectives, the SEC must actively engage with industry stakeholders, including cryptocurrency exchanges, blockchain developers, and investors. By fostering open dialogue, the agency can gain valuable insights into the challenges faced by the industry and develop regulations that are both effective and supportive of innovation. Striking the right balance between regulation and innovation will be crucial for the SEC moving forward. While it is essential to protect investors and maintain market integrity, overly stringent regulations could stifle innovation and drive businesses offshore. The SEC's ability to create a regulatory framework that promotes growth while ensuring compliance will be a key determinant of its success. The dismissal of the Coinbase lawsuit marks a significant turning point in the agency's approach to regulating the cryptocurrency industry. With the establishment of the Crypto Task Force, the SEC is signaling its intent to develop a more comprehensive and transparent regulatory framework for digital assets. As the agency navigates this complex landscape, it must balance the need for investor protection with the imperative to foster innovation. The coming years will be critical in shaping the future of cryptocurrency regulation in the United States, and the actions taken by the SEC will have lasting implications for the industry as a whole. The developments surrounding the SEC's approach to cryptocurrency regulation also raise important questions about the role of international regulatory bodies and how their actions may influence United States policy. As countries around the world grapple with their own regulatory frameworks for digital assets, the SEC must remain vigilant and adaptable to ensure that United States regulations do not hinder competitiveness on a global scale. Countries like the European Union, the United Kingdom, and Singapore have made significant strides in establishing regulatory frameworks for cryptocurrencies. The SEC's ability to adapt to these international standards will be crucial as it seeks to maintain the United States' position as a leader in the global fintech arena. As technology continues to evolve, so too must the SEC's regulatory strategies. The rise of decentralized finance, non-fungible tokens, and other innovative financial products presents unique challenges and opportunities for regulators. The SEC's willingness to embrace technological advancements while ensuring consumer protection will be critical in shaping the future of the industry. Another essential aspect of the SEC's new approach will be educating investors about the risks and benefits associated with cryptocurrency investments. The agency has a responsibility to ensure that consumers are well informed and equipped to make sound financial decisions in an increasingly complex market. In summary, the SEC's dismissal of its lawsuit against Coinbase and the establishment of the Crypto Task Force represent significant steps toward a more transparent and effective regulatory environment for cryptocurrencies. By prioritizing clarity, public engagement, and innovation, the SEC aims to create a framework that not only protects investors but also fosters growth in the dynamic world of digital assets. The coming years will be pivotal in determining how these regulatory changes will shape the future of the cryptocurrency industry in the United States and beyond. The SEC's recent actions signal a broader recognition of the need for a balanced approach to regulation in the cryptocurrency space. As the industry continues to grow, the SEC's willingness to engage with stakeholders and develop a more comprehensive regulatory framework will be crucial. This approach could help to instill confidence among investors and businesses alike, fostering a more robust and sustainable market for digital assets. Furthermore, the establishment of the Crypto Task Force reflects an understanding that the cryptocurrency landscape is not static, it is constantly evolving. The SEC's proactive stance in creating a dedicated task force demonstrates its commitment to staying ahead of the curve and addressing emerging challenges in the digital asset space. This is particularly important as new technologies and financial products continue to emerge, necessitating a regulatory framework that is both flexible and adaptable. One of the key elements of the SEC's new approach is its emphasis on stakeholder engagement. By actively involving industry participants, consumers, and other stakeholders in the regulatory dialogue, the SEC can gain valuable insights into the challenges faced by the cryptocurrency industry. This collaborative approach can lead to more informed decision-making and ultimately result in regulations that are more effective and supportive of innovation. Engaging with stakeholders also helps to build trust between the SEC and the cryptocurrency community. By fostering open dialogue and transparency, the SEC can demonstrate its commitment to understanding the unique characteristics of digital assets and the needs of market participants. This trust is essential for creating a regulatory environment that encourages innovation while ensuring investor protection. As the cryptocurrency market continues to grow, educating investors about the risks and benefits associated with digital assets becomes increasingly important. The SEC has a responsibility to ensure that consumers are well informed and equipped to make sound financial decisions in an increasingly complex market. By providing educational resources and guidance, the SEC can help investors navigate the challenges of the cryptocurrency landscape and make informed choices. Education can also play a vital role in mitigating the risks associated with cryptocurrency investments. By raising awareness of potential scams, fraud, and other pitfalls, the SEC can empower investors to protect themselves and make more informed decisions. This proactive approach to education is essential for fostering a healthy and sustainable cryptocurrency market. Looking ahead, the future of cryptocurrency regulation in the United States will likely be shaped by the SEC's actions and the broader regulatory landscape. As the cryptocurrency industry continues to evolve, the SEC's ability to adapt its regulatory framework will be crucial for maintaining investor protection while fostering innovation. The establishment of the Crypto Task Force represents a significant step in this direction. By prioritizing transparency, public engagement, and innovation, the SEC aims to create a regulatory environment that is conducive to the growth of the cryptocurrency industry. This approach could help to position the United States as a leader in the global fintech arena, attracting investment and fostering technological advancement. In conclusion, the SEC's dismissal of its lawsuit against Coinbase and the formation of the Crypto Task Force represent significant milestones in the agency's approach to cryptocurrency regulation. By embracing a more collaborative and transparent regulatory framework, the SEC aims to foster innovation while ensuring investor protection. As the cryptocurrency market continues to evolve, the SEC's actions will have lasting implications for the industry and its participants. The coming years will be critical in shaping the future of cryptocurrency regulation in the United States and beyond, and the SEC's commitment to adapting to this dynamic landscape will be essential for its success.